Welcome to today's video presentation on short-term trading using market depth. My name is Tom Long and I'm one of the Daily FX Power Course instructors. At one time or another, it seems that most traders attempt short-term trading. Because of the high level of risk of loss in trading, the thought of getting in and out of positions quickly with repeated small profits can be appealing for many reasons. No overnight exposure, the ability to capture trading opportunities in both calm and volatile market conditions, and typically there is the use of tight stops. However, one of the main challenges with short-term trading is that short-term charts, like the tick and 1 minute, are just not as reliable as the longer-term charts like the hourly or daily. There is simply more trading in a candle on the daily chart than there is in the candle on a 1 minute chart. So the longer the time frame used, the better the representation of the mood of the market. Traders may also find that technical indicators are less useful in short-term trading, as they are essentially lagging in nature. That is to say that the signal generated to enter into the trade is based on what has already happened. So traders will find that they are entering into the trade near the end of a short-term move instead of near the beginning of that move. Because short-term traders cannot afford to place their trades based on lagging indicators, they have looked for other ways to identify their entries. The most basic concept of trading is that the market moves up when there is more buying pressure than selling pressure. When this pressure subsides, the move runs out of steam, forming support and resistance levels. Short-term traders have learned to rely heavily on these support and resistance levels to find their trading opportunities. Unfortunately, like the technical indicators, support and resistance levels are also less reliable on the short-term charts. What we believe short-term traders really need is a tool to measure the buying and selling interest at any given time to identify the formation of real-time support and resistance levels. There is such a tool, and it is called Market Depth, and it can be found on the FXCM Active Trader platform. Market Depth will help you identify these short-term support and resistance levels. While the FX Trading Station allows you to see the bid and offer of each currency pair, the Active Trader platform shows a multi-dimensional look at the same market. You can see the top 5 bids and offers and how much volume is associated with those orders. This allows one to potentially see how much buying and selling pressure there is in the market before it shows up on the chart. But how can you use this information for your trades? The key is to understand the role of the market maker. Now, the goal of a market maker is to earn the spread while taking on as little risk as possible. They do this by keeping a balance of orders. If the market maker is receiving a rush of buying pressure, they will want to make more liquidity available on the bid side so they can even out their balance of orders. So when a trader sees that the market maker is heavy on the bid, in this example, quoting twice as much as they are quoting on the offer, then the trader can assume that the market maker is receiving a lot of buying orders, thus providing more confirmation for a long position. Seeing market depth gives traders the opportunity to view order flow from the market maker's perspective, which offers a unique look at the market's directional bias. For example, here the trader saw that there was only 5 million available on the bid and 11 million available on the offer when the euro-yen was trading at 117.47. Understanding that the market maker's bias would have been toward the short side, the trader then could have sold for a 20 pip profit. Now please note that this feature does not prevent losses from occurring. Let's take a look at some strategies. Here is an MACD scalping strategy designed to catch the short-term momentum change on a 1 minute chart. The MACD is also used to identify both entries and exits. If you are buying, you will use a 1 minute chart to go long when the MACD line crosses above the signal line. You want to check to see if the bid-ask ratio is more to 2 to 1, then set a protective stop for 20 pips, and exit the trade for potential profit when the MACD line crosses below the signal line. To sell, you do the opposite. Let's look at an example using the pound yen. The first thing we look for is the purple MACD line. We then wait for that line to cross over the red signal line. On the next completed candle, we enter long. Having 1 or 2 MACD histogram bars above the zero reference line can give us further visual confirmation. We are able to enter at 129.25, and we place a protective stop 20 pips below our entry at 129.05. Now notice we have an imbalance favoring the bid side by a greater than 2 to 1 margin. This may not always be the case, but it is favorable to our long trade. After some price consolidation, the pound yen breaks higher, and we are able to close our position with a potential 24 pip profit. Now please remember that the high degree of leverage can lead to large losses as well as gains. Traders can submit these types of orders rapidly with the ActiveTrader platform. By manipulating the trading mode feature, traders can execute their orders with either the default, one-click, or double-click option and preset their stops and limits to easily lock in their profits or losses. These time-saving tools are essential for short-term traders who need to get in and out of positions quickly. Let's take a look at another strategy. Here is a Bollinger Band strategy that you can use on a 1-minute chart. We will use values of 60 and 2 on the first band, 60 and 3 on the second band, and 60 and 4 on the third band. Now, by definition, most of the priced action should take place between the bands. Here is an example with the euro-dollar. The first thing we look for is a test of the lower or upper Bollinger Bands. Since the euro-dollar is testing the lower bands, we look for a reversal back to the upside for our buying opportunity. Market depth gives us confirmation for this trade, as the number of bids at 10.5 million far exceeds the number of offers at 4 million. So short-term traders can buy since they are looking for a move up. The combination of a test of the lower Bollinger Bands and the bid volume exceeding offer volume by more than 2 to 1 results in a strong move up, which allows traders to take profits on their buy position. But of course, not every signal is going to be a profitable trade. But another powerful feature of market depth is its ability to tell a trader when not to enter into a trade, despite a signal indicating to do so. For example, in our Bollinger Band strategy, a sell signal is generated when a currency pair trades to the upper bands. Now, without the benefit of the ActiveTrader market depth, a trader may enter short in order to capture a short-term move to the downside. However, when we look at market depth before we take this trade, we can clearly see that bid volume outweighs offer volume by a margin of nearly 2 to 1. There are simply more buyers than sellers, even though the indicators in our chart are showing that the pound-yen is overbought. We can recall from Technical Analysis 101 that a market can remain overbought for a prolonged amount of time as prices continue to make new highs. If we had entered into this trade, we most likely would have been stopped out for a loss. Now, the key to using technical analysis successfully is to use different tools to confirm a signal to enter into a trade. We believe that the use of market depth is an excellent choice since it is not similar to any other technical indicator. It is like having X-ray vision, allowing you to see beyond the information available on a chart. It allows the trader to judge the strength of a move with a directional bias. We think this is a huge advantage for short-term traders. And if you're interested in learning more about this tool, please contact an ActiveTrader representative for more information on how to take advantage of this new feature in your short-term trading approach. Thank you very much, and good luck with your trading.